We're a couple of weeks into 2018. Chunchek, in 2017 we saw very high valuations. Are we expecting that to continue, and what effect is that going to have on the M&A market?
In terms of valuation, that's going to be a big driver as to how deal making goes, right? As you've alluded, 2017, according to the Logic data, we've seen a record high median EBITDA multiples on M&A deals. In fact, we reached 14.3 times. We've never seen such a high multiple. What that translates into is that if I were a strategic company, a strategic buyer right now, I would be concerned about overpaying for businesses and for assets, right? Dow just crossed 26,000 level, great for the equities market, but I may not want to spend more money into this, particularly if I'm worried about a potential correction in the market in the months to come.
With the high valuations though, are we expecting to see more listings, so companies exiting the companies through IPOs?
Well, right now we're seeing quite a lot of momentum on the IPO market, and that always competes with M&A trade exits, right? So until a correction happens, yes, there's going to be more exit routes on the IPO front, right? Sponsors are probably going to look at listing more favorably than trade exit or an SPO as well. Speaking of sponsors, great time to exit. However, can they find a willing buyer for the assets that they are holding on to right now? That's a big question. So until a correction happens, probably a little bit more IPO activities than M&A activities.
And if we look more at the corporate side of things, we've seen now in the last couple of days we had GE thinking about spinning it off their business, splitting their business into 3 different entities. Is that something that we're going to see more of as well?
We may see activists becoming more demanding in asking corporates to return capital to the shareholders or to realize values, right? So there may be more pressure on corporates to just slim down and focus on their core businesses. You've raised GE, that's a very good example. We expect more of these activities to come. So maybe more spin-offs in the year ahead.
Okay. And one of the trends that we saw last year that really stood out a little bit, maybe not because of the size of the deals, but just the amount of deals, was non-tech companies buying technology companies. What about that trend? Is that something that we continue to see this year?
There's a lot of momentum going into that, right? If we look at that particular segment, we see financial companies, insurance companies, even companies in traditional industries, right? All buying technology companies in order for them to adapt to the evolving changes in consumer habits, right? Everyone is using their cell phones right now to get on with their lives, to do businesses. So a lot of companies in different industries are getting into that. The Logic data shows that last year we saw more than 7,000 of such deals. 5 years ago, that number was 3,000. So there's definitely a lot of momentum, and we believe that non-tech companies are going to keep buying tech companies heading into 2018.
And then I guess the big thing in the technology space is SoftBank.
That's right. So SoftBank obviously has raised a $100 billion vision fund last year with the Saudis. A lot of that capital still needs to be deployed. So if I were a private holder of a tech company, I would try to see if SoftBank could write me a check. That's going to be a big payday for me, right? So there is still quite a lot of momentum going on in the tech M&A space.
Okay, thank you very much.